Okay, guys, welcome everyone to this backtesting session that I will be carrying out today. So, in today's session, I'm just gonna do the backtest that I usually do every day using my strategy on the Euro USD. I'm gonna take notes of everything on my strategy journal, which is this one, and I will be, of course, explaining everything that I'm gonna see. And this is how actually I backtest. Okay. Now, in order to start this, you can see that we are on Friday, Sunday. So I'm gonna do the next. I'm gonna do the basic analysis from the starting from the beginning of the week. So in this case, because this is Friday, we're gonna go back a little bit here so we don't spoil or trading practice, right? So this is some of the results of the previous week, but now we have the next. All right, so I'm gonna start from zero. So I'm gonna delete mostly everything here. This was the analysis I did yesterday. So in a bullish range, as you can see right here, we are in a bullish trend, and the price has already confirmed the end of a range, which is because we have here a break of structure. After this break of structure, the price led this order block in which the price had this reaction and it continued pulling down, right? Now look at the next. We currently are on this zone. You see this? This is a key level, which is already has already been mitigated because the price reacted here and probably there are two possibilities. So this is the analysis I do in a daily time frame. For this week, which we're gonna back test, I expect the price to do the next. So there are two possibilities. It could go down and react on this imbalance. Here is an imbalance in a daily imbalance and also is mixed with an order block in 4 hour. Go to this imbalance and continue, or just having a reaction and continue up with the uptrend, right? Another possibility is that the price can just react from the point which is actually now and continue up a little bit and probably go down just to take liquidity. So make the people buy because this is a double bottom pattern, right? And they go down and it could react again on the imbalance or even go further to the order block and have a reaction. And probably it can continue going down just if it breaks this strong low in a daily time frame. But uh, doing that will be too far from what we're gonna work with. Okay, so once I do this, I copy this and I go to my journal and I write it here. I do on a weekly analysis because we're in a back testing, I'm just gonna do the analysis from daily time frame. Now in 4 hour time frame, let's check here. Excuse me. All right, now in 4 hour time frames, let's see the next. So if we analyze this was the break of structure, the boss on a daily time frame. Remember, we just marked this, and this was the impulse on 4 hour time frame. So it means that in certain moment this was our strong low in 4 hours, which means that it was an uptrend, right? But when we got the next, which was this, when we got this breakout with a body of the candle, it means that the trend may change, and that's what actually what happened. So look, the price then reacted on this order block, or it go a little bit further. It went to an imbalance right here, and to this. Can you see this candle wick right here, the one I'm pointing at here? Well, the price reacted on this candle wick. Let me mark it. It's super small, in fact. All right, and after the reaction on that candle wick, the price entered there or took the liquidity of that point, and then it continued with the downtrend in 4 hour time frame, right? We're doing it in 4 hour time frame. I'm doing all of it just to explain to you then the direction. So after that, the direction in 4 hours became bearish, right? So it took the liquidity right here, and then it make a boss break of the structure here. Boom. After this break of structure, we can assume that this will be our strong high in 4 hour time frame, right? So it will be our strong high in 4 hour time frame. 4-hour time frame. Gotcha. And we, after this break of structure, well, it pushed up a little bit, entered into an order block, continue with the downtrend. It took the liquidity of people who were selling here, and we continue with the downtrend until this point right here, because this was the lowest low, apparently. And then we got this break of structure, which was the end of the range in 4 hours, right? So we're assuming that all of this doesn't exist so far, because we're analyzing why the price has done these movements, right? After having this break of structure, well, we could understand that that's the end of the range. So we were working with this range so far, and then the price entered or reacted on this order block, which is right here. Well, maybe just took the liquidity of this imbalance. Here is where it goes. Look, it entered right in the right here, and then it continue with the downtrend. It may have some reactions upwards, like towards the like continue with the uptrend, but no so far, right? And it continue with the downtrend. Now look at the next. We have to update our range, because once we have this break of the week high, which is currently what we're perceiving here, we need to select our new strong high on 4-hour time frame, right? Ideally, we would select this one because it's from this point where the impulse starts, right? However, we need to refine it a little bit more, because as you remember in some of the classes I have explained to you, or some of the videos that are here, in order to find a valid range beginning, it needs to accomplish the next, which is, first of all, it needs to have a liquidity take or a liquidity sweep, which is right here. I am already marking it. This is the liquidity sweep. After the liquidity sweep, right, the price, to confirm the range beginning or ending, in this case it will be the beginning, we need to have a break of structure, which is already here, right? And after this break of structure, we need to confirm that the reaction entered in an imbalance or an order block or in a candle wick. So in this case, particularly, as you can see, the price has reacted on a order block right here. So that's why it entered and it continued pushing down, right? So this will be our new strong high in 4 hours. Now, after I got this analysis, I did all of this, but I have done this explanation just for you to make it clear. So we can understand that in 4-hour time frame, the trend line is bearish, right? We have a downtrend. Now, what I expect to happen, there are two possibilities. Remember that we got some possibilities on in a daily time frame, which in daily time frame is a bullish trend. We need to be aware about it, right? Now in 4 hours, we know it's bearish. Now there are two possibilities. The price can react from this point, right? Confirm us a break of structure here, which it means that we are then in the end. I mean, the range has ended, and then it can continue pushing up, right? As one of the possibilities we got. The other one, which I consider will be the most suitable, is maybe from this point the price can continue going up, but it won't make a break of structure. It will react on one of these order blocks. It will continue down, and maybe in this imbalance, if we got a confirmation, here will be the end of the range. And after the end of the range, we can confirm the end of the complete range, right? So this range, this impulse has not been finished yet. So we need to wait for the final ending of it. And it doesn't mean that we need to wait until that to make decisions, no. But that will clarify the end of this impulse and maybe the retracement. And also because this end of the range is aligned with this imbalance and order block daily, that will determine a really high probability of retracement on a daily time frame. So now we're just putting together the two time frames, the daily time frame and the 4-hour time frame. With that confirmations, then you can spot a real and clear direction of the market, right? So this is what we will expect to happen on the 4-hour time frames, and that's what we actually do. So we analyze, we think, we assume what may be the possibilities. Let's imagine that this is Sunday. Ideally, this is Sunday, right? And this is what we do. I do every week beginning, and then and during the week I just continue trading, right? Perfect. Now let's go to 1 hour time frame. Okay, in 1 hour time frame, well, we need to do the same exercise, which was the next. I think definitely it was bearish, the trend line. So let's go back. So this was the 1 hour range. Look, you can you see the okay? I'm gonna start from this point here. As same as we did with the previous 4 hour time frame, I'm doing all of this in order to make it clear enough so we all understand when the direction changes or what is the real direction on this time frame. So after this, look, from this point to this point right here, all of this is our 1 hour range. So at that moment it was bullish. After this breakout structure, what happens after this? You already know that, right? So we got a market shift, which means that now we're in a bearish trend. Now, after this breakout structure, we had to analyze the new high, strong high in 1 hour, which was this one. This was the new strong high in 1 hour. Why? Remember, it takes, I'm gonna make it just spoken. I'm not gonna mark it because then it will take too long. But liquidity grab, you can see here this candle, then we have a breakout structure, and this candle we reacted on this order block. Now we have a real and proper and clear, let's mark it, 1 hour strong high right here. Yes, once you got this 1 hour strong high perfectly spotted, um let me take this strong high right here, boom 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 boom, in 1 hour time frame, we will wait here for the range ending, which is here, and then it made a range ending, it made it with the bottom of the candle, then we got a retracement, and it kept continuing up until the order block area. That was 1 hour 4 hour order block, and then we continue with the downtrend, right? We are all clear about it. And once we got this breakout of a structure, now we have to do the same exercise, which is spot or new strong high. So after this breakage, right, of this low, well, we just have to look for a new strong high, which is aligned with the previous definition, right? Now, this high won't work because it's okay, it reacting on any balance, which is which happens most of the times it happens this, right? But um when it happens, we take this more as a liquidity rather than a real strong high beginning, right? So that's why I don't take this as the new high. Now after this, oh wait, I'm kidding, I'm so sorry. Now this will be the strong high, yes. Why? Look, pay attention to the next. We have here the strong high, perfect, and then we have the liquidity sweep, which is this one could be the liquidity sweep, and then we got the break of a structure. Oh. Then we have here the break of a structure, right? After this boss, if the price breaks the low, which is this low, the closest high will become the strong high. That's the reason why I selected this as the strong high. But then we would say, well, Manuel, but it doesn't follow like the previous confirmation you mentioned. You're right, but this is just in the case that when we have like a market shift, like in this case, this was our week low. We know that was likely to be broken because that's why it was called a week low. But once we got this breakage right here, boom, the closest high will, and that follows the confirmations that we already set, liquidity sweep and break of structure, and it will become more strong higher immediately, just because of the fact it make this breakage of the wick low in this case. Okay, now it broke an edge and it continued pushing down, right? And so far this is where actually we are, right? Now, according to the previous analysis, I still consider this may be a really interesting point in which the price can um, do what we said before, which was that the price may likely go down. It can confirm in 1 hour time frame the end of a range right here, and then continue with a retracement. And this will be all the week. And this is aligned with the 4 hour time frame, and the um, sorry, it's aligned with the 4 hour time frame and the daily time frame, because there it is also reacting to this imbalance or the block imbalance, right? Possibilities are maybe, I don't know, but maybe it can continue going up and start the ending of a range from here. I don't see it that possible too much, because right here in this moment there's a lot of people buying. Why are people buying? Remember that in daily time frame there is like a double top here. You see here this low, so there are a lot of people buying, people putting orders here to buy, which is not bad. I mean, maybe the price may have a reaction there, but unless we have a confirmation and end of the range confirmed in 1 hour and even more in 4 hours, then I will consider it a real entry point. Otherwise, it will be dangerous for me. However, I never discount that possibility, because in the market anything could happen. So anyway, so we got in 1 hour time frame that is a bearish trend, and in 4 hour time frame as well is a bearish trend. Now we have everything marked and we have like the real direction of the market. We can start actually trading. So this is my suggestion for you to do when you start doing your trading backtesting. So you need to do the same that you do every day, and with that, in that way you can actually do the, let's say, that as real as you do on your daily life. Okay, because one of the mistakes we must have when we, let's say, trade, is that we just backtest very differently as we would do in our real life. And that is a big mistake, because if you don't backtest as you do daily, it means that you're wasting your time practically, because you're not practicing what you're not be teaching your brain to behave in the correct way. You're teaching your brain to behave, um, let's say, to please your needs. So you're spoiling your brain. And when you face the real market in a real time, you're just wasting your time, because you're not doing it as you actually, I mean, you're not back testing as you actually do in your daily life, right? So we need to bear that in mind. Now, to make it closer, so now we have everything. This is Friday, and the week starts on Sunday. No, it's not Sunday yet. Right. So you can see right here where where I'm just pointing the black point, the black dot. There is the this is what I'm waiting. All right, now I personally trade on a New York session. So London session, I'm not awake at the time, so that's why I cannot execute orders there. So I just put these lines, which this is like the range, or not range, but the time in which I am active in the market. After this, I mean, I'm actually on my computer or close to my phone, right? Mm, if I'm out of these hours, I don't trade, because I discipline myself. For example, if I see an opportunity to enter in the market and it is in London session, well, it won't. It's not my opportunity, because I'm not there. Anyway, let's keep seeing what happens. So I did the analysis on Sunday, imagine that, and now this is morning. I'm sleeping, still sleeping. Right, here is. So this is where the market actually is. Uh, Something that I would like to see is the next. We could wait for the breakage of this. Oh, this is a no boss in 1 hour, right? This is a 1 hour no boss, so there's no break of structure. Um, and from my point of view, there is still the all of this area to get for the price to react, right? Now, if we got a break of a structure, a bust here, well, I will consider in buying. But so far, I am still selling. I'm still watching selling opportunities until the price get to the supply area. So I will wait for a confirmation here, which will be called a confirmation pattern, continuation pattern, and then I will see. Now let's go to 5 minutes because it's in 5 minutes the time frame in which I confirm my entries as well here. But now let me check one thing. In order to confirm this even more, I need to go back in the time, and this what I'm gonna do will be a refinement. I am refining my entry areas. So as you can see, this is a huge candle, bullish candle. Now what I'm gonna do is I'm gonna refine it, and it means if the price gets to this uh, area I'm selecting, I will enter to the market. All right, so look at the next. No, I will take from the beginning. All right, so here, look at the next. Yeah, so it's the same area. So I have spotted 50% of this candle wick, which is which hasn't been mitigated or hasn't been balanced by the price. So if the price enter on this zone, blue area that I have already marked, which is this is an imbalance, is a daily imbalance. This corresponds to um, daily imbalance, a 4 hour imbalance, and a 1 hour imbalance, right? So all of them are aligned, and this is a mitigate. This is a refinement. When an area is properly refined, as you can see right here, um, there are highly possibilities of reaction, and more than that, according to your trading strategy, which in this case is smart money concepts. Once I have a really clear defined area, I can look for opportunities to buy. So, with that being said, we always make a mistake. With that being said, I will wait patiently for the price to even get to this buying area or this selling area, okay, which is a demand zone and a supply zone. So let's wait patiently and see what happens. This is what actually I do in the market. Mm-hmm. Mm-hmm. All right, now we can see it's having a reaction. So uh, actually, it's a little bit far from what we expected. It would do something, but um, let me check one thing. All right, look at the next. Remember what we said before that I was waiting here for a break of structure or a confirmation of a break of structure, a bust in 1 hour. Well, I'm gonna delete this line. All right. Can you see the end of the range in 1 hour? Because it has already done it. Here is the end of the range. So we have a liquidity sweep right here. Boom. Right after this liquidity sweep, we have a breakage of a structure, which is this one, with a body of a candle. It's very small. It is. Do I like it? Well, I would prefer it would be clearer, but from this it can continue with the uptrend, definitely, because it has already gone very far, very close to this imbalance. But let's see. Let's wait. What I don't like is that it hasn't reacted to in one of these imbalance areas. So, and it's far. So let's wait. Let's wait. Hmm. You see, it had a reaction. So if we have entered here, we would have a reaction. But I don't want to take it because it hasn't reacted on the demand area. It has done a confirmation pattern, yes, but it's out of our area. So at least it will be closer, at least some pips closer, but it hasn't. Okay. So well, so far, look, so on Monday we didn't have any opportunity. That was the opportunity, but for me it was too risky. I didn't want it to take it. Whatever, if you wanted to take it, it will be your decision, not mine. It did some yeah, it had some reaction, but okay. Well, now we're out. Let me check what would happen here. Here I will wait for a confirmation pattern to sell. Well, it did it. So look, this is what I would do. What time is it? 12. Okay. I'm not active at this moment in the market, but if I, but let's say it entered here at 12 midday, right? So in that particular case, if it is 12 midday, this is what I would do. I will spot my entry area, which would be, I would select it here. This is the confirmation. Enter, it made a liquidity sweep. After the liquidity sweep, it made a breakup of the structure, which will be this one. I don't like to, I mean, I really prefer to grab the one who has more liquidity. But now let me check one thing in 1 minute. In 1 minute, I will select this has ended range in 1 minute. Um, Guys, I'm not explaining what I'm doing here. I'm selecting the best entry point. Well, I would say the best entry point for this order would be this order block right here. Maybe the price can do the next. The price can enter here and go down, possibility, or it can just continue with the uptrend and take us out of the order. These are the two, and the best possibility for me is that entering my order block, which is already marked here, and that's it. Perfect. Now, actually, this is what I would do, and it is to put the order, a limit order. I put the take profit and I put the stop loss, and I assume complete 100% the result of this order. So here is 4 pips, kind of 4 pips. And I'm gonna put here 7 as a stop loss. 7 pips. All right, there you go. All right, and now I'm gonna put as a take profit limit 4 times what I'm risking. This will be the reach, the win reach for this order. Uh, there you go. There you go. Yeah. Yep. So this is what I would do. Now, since this is what day is this? This is Monday. Well, I will wait, and remember that I will be active in the market next day at 5 a.m. Sorry, 6, 7, 7 a.m. here. Okay, from here to here. Some people would ask me, hey, why don't you use some of those indicators? You know, there are some indicators in which you just put the zones, the daily zones, and you just can, well, it show up. But I don't like that. I'd rather prefer to make it manually so I can do it on my own. All right. So let's play it and let's see what happens. Waiting patiently. This is what time is it? This is we are already in Asia session, right? So you see, well, let's say this not always happened, but my intuition in this case, my instinct after watching this market many times said to me that I shouldn't put the order. By this moment, we have been on break even. And by this moment, we should have been in stop loss right now because the price would already took our stop loss. Now, I'm still out. I hope this order do not have enough reaction. So when I woke up next day, so by this moment, uh, my order will be in stop loss because it's having a really huge reaction. So after this liquidity grab, I mean the price is already very close to this imbalance. So for me, it's enough for the price to have a reaction. Oof. And now this order, from my point of view, is already invalidated, but I have to let it there because I should be sleeping and there is no possibilities for me to take this order out. Well, probably it has already opened it. I'm not so sure, but look, just wait patiently. All right, it continued going down. Well, yeah, that's it. All right, look what happened. Look what actually happened. So the price, unfortunately, did not open our order. Look, we were like one pip closer to get it to open it. Anyway, that happens sometimes. So, and it continued going down. Right now, by the time I was awake, let's imagine I just wake up at 7 a.m. Um, well, let me check. Dun. All right, now I'm in the market. Now I am actually on my computer. I realized and I said, "Holy crap! What a shame. The order did not work." Okay, that's it. Now let's continue with this. Now the price is in the zone we wanted it to be. And now I will actively wait for a confirmation. This is the type of orders I like the most because I just have to wait for a confirmation. Let's see. Nice. What I'm seeing here is nice for me. We can see the first thing here, which is the liquidity grab or liquidity sweep here. Boom. Here it is. Liquidity sweep. And now I'm going to wait for a confirmation here. Boom. Let's wait for the confirmation. Is this a confirmation? No, we need to wait for a break of a structure with a body of the candle, a proper boss. It's not a boss yet. It's not a boss. It is a boss. Perfect. Now, what I have to do here is just selecting my entry point. Now, why do I go to 1 minute time frame? Because if you go to 1 minute time frame, this is a complete range. Now, what I'm gonna look is for the decisional and the extreme of the movement. So the decisional could be, well, there's a lot of liquidity prior this low. This is the extreme. We all know that this is extreme of the movement creator. This one, right? Because we are in a demand zone, we have to put it in blue. Sorry, demand. Now, if you look at the next, we have here an imbalance. So here we have two possibilities, two entry possibilities. So since yesterday we didn't execute any order at the market, I will execute two orders. So the first one will be at the extreme of the order. This one, the extreme. So let's put it here. This is 4 pips. I'm gonna put 3 more, so 7. And since sometimes The price is a little bit reckless. I'm gonna put 5 more. Yeah, that's it. This is the first order to the extreme, so the moving creator, and then I will put it here on this imbalance, 5 minutes imbalance. Why there? Simple, because if I go to 1 minute time frame and I spot this area, I will find here that there is a beautiful order block. Now, all of this is liquidity prior the entry area. Boom. All of this is liquidity. In 1 minute liquidity, all of this is liquidity. So it's money grab, money accumulated, right? So this is the order block I'm looking for. But I'm gonna put here because the 5 minutes imbalance starts here. And now the stop loss should be, it should be here, honestly. But 3 points, 3 pips is super small. So for me, so I'm gonna put here 6 plus 3, 9. No, I think 8. 8 will be fine. That's it. So I'm risking 2 orders here. And of course, I will change the lot size. So the amount of money I risk by each order. So here it will be, it depends. The calculation should be 1% of the account. Let's see what actually happens. All right. All right. All right. It had entered to our first order. It hasn't entered to the second one. It's almost open. Well, all right, it's open. So the both orders are actually open. I'm gonna move this one to the right. We already know it's opened. Ah, no, sorry, not this one, this one. Because this may be close. This may go to stop loss. Now let's see what happens. Well, we got one stop loss, which was this first order. This imbalance order went to stop loss. It's alright. It's an opportunity. We assume that it will be lost. Let's continue. Oh Jesus, it took us out. Well, it happens. So what are we gonna stop trading? No, of course not. Why not? Because even though we are out, it took us out for, I would say, 1 pip at least. It was 1 pip. I will wait for a new confirmation. All right, as you can see, the price did had a reaction. They had the reaction we were expecting. Now it's going out. It's going out with us. What? Okay, so now we have 2 losses. This was an advanced market structure pattern, right? So what I'm gonna do then is the next. I'm just gonna grab this here. Go to my journal, strategy journal. I'm gonna. This was the confirmation. Just gonna put it like here very briefly. It was an advanced market structure reversal. This is a reversal. It was on November the 4th. So we execute 2 orders and we got -2. Perfect. Right. Now let's continue and let's watch what happened after this. Okay, we're out. Perfect. Now this, I'm gonna delete it. I never delete this because it's the summary of the week. Now we have the liquidity graph. Now we're gonna looking for the next high to have a confirmation that I would say would be this one. And let's see what happens. Let's see. Let's wait if the price confirms us this point. But it didn't. It didn't at this moment when we were there. So that day we got two losses, right? It's all right. That happens most of the time. And now let's put the here the for next day, which will be Wednesday, Tuesday, Wednesday, 7 a.m. and midday. Good. Let's wait. It goes down. Did it? It didn't. It didn't open. It didn't. This was the low that took us out, unfortunately. Let's see what happens after this. And we need the price to break this with a body of the candle. So make a 5-minute confirmation. And after that 5 minutes confirmation, we can enter the market. But seriously, guys, what I consider it's that in London session, it will make it. Oh, no, 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 it didn't. Okay, good. I spoiled it. Right, look at the next. So all of this is, as I call, it's just noise, like market noise. Because what we really wanted to see is the breakout of this high. Now, if the price, as you can see, the price just keep itself in that range, it never go further this low or further this high, and it did it, but with a not with a body of the candle, just a candle wick, which for us is nothing. So we are luckily at the next day waiting for a confirmation, so we will be able to enter in an order. Now, let's see. Boom. It took the liquidity. So we have already our liquidity graph. Now we need to spot our highest point in the market, which it would be this one right here. So this is not now our confirmation entry, is after the breakout of this high. It would be cool, it would be this one, but no, it's not clear. So I would select this one. And now let's wait what happens. Boom, we gotcha. Perfect. And now look at the next. We are gonna do exactly the same we did yesterday. Yesterday, I'm talking some minutes ago. We're gonna select in the decisional. Oh, this is something I didn't mention in the previous order. This is the decisional, and this is the extreme of the order, right? So the movement creator right here. Why I do this? I don't want to lose the order, but I don't gonna enter by FOMO. I'm just gonna enter by confirmations. So this is the 1 minute range. It was broken with about every candle, and then we will have here we can spot next. This will be the liquidity. In fact, this is the order block I'm seeing here. But in 5 minutes, 5 minutes, 5 minutes. It's an imbalance. But let's see how many pips we have here. Boom. If I put my order here, it will be 5 points. Yeah, five pips. It will be here. 6.5. And let's put 2 extras, so it will be 8. 9. Let's put 9 pips here. 9. And now I'm gonna put a second order on the extreme, which will be here. And I think it will be another 9 pips. Here is 6.6. I would say 9, it will be fine. All right. Now we already got our entry points. And now it's time to wait. Let's see what happens. All right. It took us out in the first order. So this one. That and all of this information, what is the meaning of that? Remember the first order that we execute, which we didn't have any opportunity? So this one, the price took the liquidity, but it didn't enter to the order block. And in these two possibilities, here and here, the decisional order always was mitigated. It doesn't mean that it always happened, but it means that when there is liquidity prior the entry point, it's likely to be broken or likely to be uh, out that order. Now, as I said before, I didn't want to lose the order. That's why I put it. I know that's a possibility, but anyway, let's continue. All right, and finally, we got the reaction we were waiting for, right? Which is this one. I always take 4 times what I risk. So far, here. So let's see. Now it's time to wait. So the question is, should I put break even? I always put break even when the price breaks the closest high with a body of the candle, and we are at least uh, one risk reward positive. It means I have at least 9 pips up. All right, so this order is out. What is the meaning of this? Since I didn't have the chance to put the confirmation during the time I was active in the market, what I will do is that I gonna put the take profits limit, and I will let the order open. So without break even. Um, it's because I'm not active in the market, so I'm out, right? So while the market moves, I will put here the same order, the same information. I'm doing this actually fast. I should make it with more detail, but since I'm rushing a little bit of time, that's why I do it. -1, right? And this is a reversal and advanced market structure. So we have lost so far this week 3 orders. And now I'm gonna wait. I'm gonna wait. Next day I will be active in the market will be on Thursday at 6 a.m. So by this time. Perfect, guys. So this is the next exercise we're gonna do. Okay. I will work with my patient. I will let the order run by its own, which means I'm gonna go out for a while and I'm gonna let the price do what it needs to do. Okay. So I'm gonna go back in some minutes. All right, we're back. So nothing has happened yet. So we're not. Oh, okay. Had a reaction. Very cool. What time is it? Wait, this is no. This is not. This is Asia session. All right. Let's wait. Boom, 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 boom. Let's accelerate this a little bit. I'm here. So far, boom. Good. So we got our first order at the market. So this is a 1 to 4, right? But remember, we have lose one here. So ideally, we would have 4, right? But -1, 3. That's it. Okay. Oh, let's put the result of the order. Gonna stop here. Let's stop this one here. I'm gonna take a screenshot. Looks beautiful, right? But this is what I want you to know, that before we got this 1 to 4, we got 3 losses on a row, in a row, right? Right. So um, this is something that we don't are used to see in the social media nowadays, because most of the traders like to show or show off their wins, their winning trades, which is fine. I also like to show up that, but just be suspicious when someone just show you when it's winning. Oh wait, no, I cannot do anything. I need to wait for the next day. 7 a.m. All right, we are. All right, so 7 a.m. I am in the market. I'm happily see that, oh, perfect. My order went to the price I was waiting for, and it had a reaction. Done. Now I will look for a confirmation on order, so I continue with the uptrend. So since remember that we have said at the very beginning of this analysis or this backtesting session that the price would do the end of a range in this daily imbalance. So look, our prediction of Monday or Sunday, well, the day we were there, it's been actually very right? Now we have the end of the range right here. And there you go. This is the week low. Still, we're in a better strength. Now, why this happened? This is the complete range. It's a super long range. And you say, Manuel, is that right? All of that is the range? Yeah, it is. Would this be considered the range beginning? Mm, yes, this could be this. We need to update it, right? So since we didn't get the boss here, the break of structure here, at this temporarily was our week low. So this is our new strong high in 1 hour, because it accomplishes everything that we were waiting for, which is the liquidity sweep. So it entered into a liquidity sweep, and then it has a break of destruction and a liquidity boss. So that's the reason why. And now let me check one thing. Well, it was our entry point in our previous order, which was not mitigated. Maybe the price may have a reaction there. Maybe. And now, what should we do? Wait patiently. Now, this is what day is today? This is Thursday. Good. Thursday, and we're gonna work until 12 midday. Mm-hmm. 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 Well, we already have one entry point, which is here, and it's all refined. That it was our order that was not meet open, unfortunately. So we got 7 to 8 pips. So 7 pips. So possibilities. It may go down 24 pips, and we will have the 1 to 4. 28. Yeah. Look, this is a type of order that I don't like too much, honestly. But anyway, I just have to do what the market that my trading plan says. So my trading plan says that if the price is close to an order block, which is not mitigated, may have a reaction here and continue down. And then here I will continue buying, following the main trend. That may happen. I'm not so sure because the price can also do the next, which I have seen it many times. Took the liquidity, goes down, and they have the reaction, right? So I'm not here to predict what I think, but to take actions on what I actually have in the market. So let's see. Patience, patience, patience. The order was activated. Now, if the price provide me a break of structure, which I don't think so, well, yeah, we're out. We're out, and now look, it happened what I expected it would happen. That is, the price will go down. Anyway, a loss is a loss. I didn't want to take, but anyway, anyway, I'm doing just what the trading plan says. All right, so we are out. So this day, no orders at the market. Now the next day we're gonna work. It would be on Friday. Now this order that I wasn't so keen to execute, well, provide us a result that was a -1. So we are as we started this week, like zero orders, no execution. It was a continuation pattern in 1 hour time frame. Didn't like it at all, but anyway, I just have to follow my trading plan. Good. Now let's keep continue. Okay, now we have this break of structure, and now we know we are in a bullish trend. So now this low will become a weak, no, a strong high, a strong low, and this high will become a weak high. So all the highs we will see now will be bearish. And now let me check one thing, because if in 4 hour time frame we also have yeah, a change of character, a bust, a break of structure. I think if I have seen this in 4 hour time frame, I wouldn't put the order here. Why? Because in 4 hour time frame the impulse is stronger. So that's why I wouldn't do it. And now I will spot zones like this. This supply zone or area looks more attractive to have a retracement to some of these areas, and then continue with the bullish impulse. At least, no, sorry, the retracement, the 4 hour retracement. Now, which in the 4 hour, this is the complete range, right? Good. Now, let's spot opportunities to enter in the market. Now, mm, the order blocks we have after this breakup structure, we will take as a consideration this order block, but there is liquidity prior this order block. So this is the one I like the most. I need the one I would like to see a possibility of order. But let's see what happens. And also here, if we refine it a little bit more, in 1 hour, we can have here and also an order. Let's see. Boom, boom, boom. Let's wait. All right. So by Friday, we are here. Let's go and let's see what the price will show. Friday, brothers. And this is actually how I trade the weeks during the week. Now look at the next. We have here a liquidity grab, boom, and now we have here a breakup structure. Not yet, right? So let's wait for the pattern of confirmation. And once we got the pattern of confirmation, we can enter. No boss, not yet. Okay, it's going up. Now we have a new confirmation area. So this is the new liquidity grab. Perfect. And here we will wait for the confirmation. The confirmation must be done here. Patience. Okay. Not yet. We're still in the zone. We can still sell in. It's a retracement, remember, right? Because now we're in a bullish trend, not in a bearish. Patience. Okay. It continued pushing up. All right. So it went to a further area. It took the liquidity of this high. It went to this imbalance. It reacted here. Here. It's a good area to react. Why? Because once it took the liquidity of these highs, it can continue with the downtrend, with a retracement. It's not a down, just a retracement until certain areas. It could be these ones, right here or right here. So let's check. If there, it provides us a confirmation. If it does, excellent. If it doesn't, excellent as well, because we're not gonna enter unless we have a confirmation then there. Boom, 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 boom. Okay, we got a confirmation. Can you see it here? Look. Oh, jeez. Look. It took the liquidity of the high and it made this breakup structure. Good. Now, what would be our entry point? It could be this one here. And since we're close to being the end of the session in which we work with, it means that we have to let this order go go by itself. So I would say 10 pips. It would be a good idea here to the imbalance. 9 pips. I think there's okay. Yeah, it's okay. Gonna let this here. I'm gonna put 1 to 4 to be here. Yep, and I'm gonna let it do what it should do. When it's then Sunday. Right. Well, the week has ended and we did not got this order open. That's it. So this is how the week ends. So price is a bitch sometimes. Yeah, you could see we got 2 orders nearly open by 1 or 0.5 pips and it wasn't open. And that's what we have to deal with, right? And then we got two stop losses right here. Let's say, yeah, two necessary stop losses. I mean, but I'm not talking about these ones. I'm talking about the decisional stop losses. So the one that I got here and the one that I got here, because this one was accepted, it's fine. I was waiting for a confirmation, and this one was the best order, and that's it. And this we was out. We okay, it's just part of the trading plan, and this one did not open. And this is how we end up the week, right? Now let's see. This week was a good week. You say, but you didn't win anything, right? How do you? I mean, what? How do you say it? Well, you're just saying nonsenses, right? No, we got experience, friends. We got experience. The experience I got from this week is that some of the orders that are in a bullish, are bullish orders, they mostly do not enter on the decisional areas. They enter in the extreme or movement creators. This is what actually happened. So here and here, um, I already corroborate this idea, but we also knew that it was a mistake because if I have seen the 4 hour time frame, maybe in 4 hour time frame I would have done another decision by selecting this point, which was the one we spot before. That's it. And that is experience I'm talking about. And now what I'm gonna do is just gonna take a right. I'm just gonna copy the image, and I'm gonna put all of this here in my trading journal. Right. My suggestion is always put a trading journal, and I'm gonna put here my reflections upon that I said, and it is in bullish trend. The decisional will be in a confirmation has been or had been no has been took taken, sorry, has been taken. With this I'm just creating information sample, and then if I see, for example, that in my orders, for example, from 100 orders on this scenario, 80% of them, the decisional is out or is not respected, well, I never will consider to take the orders there. Finish. Right, so look, as a summary of the week, we execute 5 orders and we got 0 results that that during that week. So let me check one thing. Look how this is a graph I have designed. So this is how it looked for equity. So I started going negative, and then so we got -2. Then next day we got -1, I think. Oh no, we got one extra, yeah, because we got 3 times more than we risked, and then the next day we got 0 and 0. So we're very on the beginning. That's it. So this is the backtesting session for today. Thank you so much for watching all of it. These tools that I have here, well, are my tools. All of them have designed by myself. By years of understanding how to do trading properly. I have my trading plan. I have my setups here, the setups I also execute, and this is what I just execute today. Now, if you are fancy to understand how I do this, you can take a look on my YouTube channel. There, I already have explained how I analyze the market. But if you also interested in the way I teach this, because you need a mentor to help you with this, don't hesitate and write back to me in my social media, on my TikTok, which is the one in which I'm starting having more followers, on Instagram or Facebook, which any of those. I'm just started this channel, so that's why. Anyway, my friends, so this is all for today backtesting session. So thank you so much for being until here, and I'm gonna see you tomorrow in the next week session because I'm gonna backtest this until today. So it means that we are on November 2025. This is the first week of November. We're on March, so we have November, December, January, 3 months ahead, which we will split it by four. We have 12 more sessions to analyze the market, right? 12. And I gotta do the same back test with the GBP USD. I'm just doing back testing in the euro, but I'm gonna do it the same with the GBP USD, and also I'm gonna do the same with the no, I think I'm not gonna. I'm just those are the only pairs I execute orders or I work with. I'm considering I'm using TradingView as my main platform to do back testing. It's expensive in terms that it is 1 year payment, but I just have 10K, like back testing candles, which is really actually very few ones. 10K is super super few. However, I've seen that there are some other backtesting tools like Soft FX for Simulator to do backtesting, and it's just one payment. It's a lifetime payment, but it's on the MT5 platform. But you have years, like 10, 12 years, 20 years of or historical information, which is mm, very appealing. I feel kind of attracted to that. I don't like honestly the platform itself, how it works, because I don't have like the drawings and the beauty that you can perceive it here. But if I need to change it to that in order to have more story to work with, sorry, history to work with, definitely this I would change to that, and I will make my mind to adapt to that, and then I will learn to work with that, right? Unless someone fund me and help me paying the the premium version of TradingView, but so far I'm not gonna invest all that money on this, right? So far, this is it for today. Streaming backtesting streaming session. If you have further questions, then down and ask me, and I'll see you then in the next one, right? Bye.